I'd like to welcome Trevor Tombe, a professor of economics at the University of Calgary's Department of Economics and director of fiscal and economic policy. Trevor just published a paper last month entitled Breaking Barriers: How Provinces Can Drive Canada's Prosperity by Unlocking Trade and Labor Mobility. And he was a co-author of a well-respected Macdonald-Laurier Institute study on Canadian internal trade barriers called Liberalizing Internal Trade Through Mutual Recognition: A Legal and Economic Analysis. I'd like to welcome to the show Trevor Tombe. Hi, Trevor. Thanks for being with us.
Great to be here. Thanks for having me on.
My pleasure. And I guess what perfect timing, right? With everything that's going on with respect to tariffs in the United States and even the markets, the economy, all the different numbers we've been seeing, unfortunately, to the downside in what we're predicting going forward for GDP growth, et cetera. So I thought, we would talk or start off with talking about these trade barriers, barriers between provinces, and get a lot of questions on this. I have a lot of questions myself, but I figured I would start with asking the question, how would reducing Canada's internal trade barriers offset the negative effects of the tariffs? Would it be a big offset? We've seen some numbers, but I know a lot of people are starting to question those numbers. So, in your opinion, would it be a large offset?
Yeah, I think it would be a large offset, and that's why it's entirely appropriate that we're seeing governments put a lot more attention onto this issue than they have in the past. So, to understand why the economic implications of this are so large, it's first important to appreciate what internal trade barriers are. We don't levy tariffs or have quotas or those sorts of border controls that we do on internal flows like we do between countries. Instead, internal frictions result from differences in rules and regulations and standards and certifications and so on that each province is responsible for in most areas of economic activity in Canada. And when the rules of the game are different from one place to another, that adds costs to any business that's operating across provincial boundaries, whether selling or buying or having multiple plants or facilities in different locations. And so thinking about internal liberalization, it's best intuitively to think about it as a kind of red tape reduction initiative where we're not literally cutting regulations, but we're harmonizing them or recognizing as valid each other's rules and regulations to ease the ability of businesses to operate or ease the opportunities for workers to move. And the gains come in a couple of forms. First, if you're a productive firm and it's easier to operate across Canada, well, now you can grow larger, hire more employees, invest more in your facility, in your equipment. And as you grow larger, you tend to get more efficient. It's also going to allow different provinces to specialize in the things that they're particularly good at, just like international trade. And the gains that we get from internal liberalization are therefore quite similar. And the gains, I wouldn't say they're implausibly large. My own estimates in that Macdonald-Laurier Institute paper in 2022 that is co-authored with Ryan Minuccia, we published, and we estimate the gains are potentially between 4 to 8% of GDP. And that does tend to be larger than the estimates out there from myself, from the Bank of Canada, various financial institutions around the cost of what a 25% tariff might mean. So long-term gains from getting our internal market more harmonized is potentially larger than the costs of these tariffs with the United States.
Yeah, and that's I didn't realize the numbers could be that high. I was thinking, well, we're hearing that GDP could take a hit of about 3-4% from these tariffs. And if you're
Yep.
talking, 4 to 8, 6 to 8 from bringing down these barriers between provinces, that's fantastic. I was hearing
Yeah.
more a number closer to 3, 4. But do you think any industries would benefit, any specific industries would benefit from taking down these barriers?
Yeah, most of the benefits internally come from service sectors. So we think about trade with Canada and the United States, it's mostly goods. About 80% of what we sell to the US is goods, merchandise, 20% services. But within Canada, a majority of interprovincial flows are services. And where regulatory barriers hit the hardest are when professional credentials require provincial licenses. There's hundreds of occupations where provincial specific licensing binds. And that means that you might be facing barriers to taking on a client in another province if you're not appropriately registered there. Plus, labor mobility is inhibited from these sorts of issues. And so within services, that's where most of the gains are. And for the most part, it's services like professional and scientific services, financial services, those that are suppliers of critical inputs into businesses and their operations rather than providers of final services to individuals.
Right. Any of the data you've looked at on this topic, obviously, does it get into any foreign investment? Like, do you think bringing down these barriers between provinces would spur on foreign investment into our country?
So that's an important channel here. We have a lot of foreign investment in Canada, and we always have. We're a smaller economy, and so we often look to external sources of capital to scale up businesses. But if you're a foreign investor thinking about setting up a facility in one province, you also face costs of setting up another facility in a different province because now you have to learn and comply with a different set of rules and regulations. Or your facility that you're investing in one province, say British Columbia, it might not be as large as it could be because its ability to sell into other markets within Canada is also inhibited. And your purchases of inputs from other provinces is also going to face additional costs. So easing internal trade barriers means that it's going to be more efficient for you to have a facility in Canada, and that facility can be larger than it otherwise could be. And you might be able to set up other facilities more easily in other parts of the country. So it does lower the cost of investing in general, including foreign investors.
And yeah, and I guess, talking to the premier as often as we've had him on our show a few times and talking about bringing a lot of business to Southern Ontario in particular, Premier Doug Ford, that is.
Mhm.
And obviously anything we can do to help bring foreign business into Ontario, to Alberta, BC, whatever the province is, our country in general, obviously would be a large help. And again, something we can do within our borders. We don't have to rely on the United States to do something or other trading partners. So that's a pretty good I guess silver lining or a positive for us. Turning now to maybe the Bank of Canada or the federal government, in your opinion, what do you think they can be doing? Maybe what they could be doing more of to perhaps mitigate the effects of these tariffs that have already been put on Canada, and we're hearing, about the tariffs that could come down the road. Is there something that you would say the Bank of Canada and our federal government, I guess, our newly appointed leader of federal government, can be doing going forward?
Yeah, two things. I think for the Bank of Canada, it is critically important that we remember that they are and ought to be singularly focused on inflation. That is a difficult job, maintaining a 2% inflation. We weren't able over the past couple of years to maintain that target, but that is the goal, and that is the only goal for the Bank of Canada. So they should raise interest rates or lower interest rates or use other tools as they determine in order just to meet that 2%. And no other objective should matter at all, full stop. They're not there to concern themselves with unemployment or income distribution or investment certainty. It's just inflation, full stop. Now, the rest of the federal government, the elected representatives through largely fiscal policy or regulatory policies, I think how we respond should, be smart about the problem here. The tariffs that the United States are levying, it's hard to know what's motivating them, but there's not a lot that we can do about that beyond diplomatic engagement to the extent that we can. Our retaliation options are incredibly limited. A small country's opportunity to cause economic damage in a larger economy through tariffs, or in Ontario's case, electricity export taxes. I mean, these are tools that might have value in a non-economic sense, maybe facilitating a public relations campaign in the United States, but they're not going to move the needle on the US economy. And so the response that governments here, whether it's federal, provincial, or even local, ought to just be on what are the measures that we can do to increase Canada's competitiveness, increase our resilience, increase how much investment we can attract. How do we increase our productivity despite the tariffs. And that means easing regulatory burdens. Maybe it means tax reform. It certainly means mitigating internal trade frictions. Maybe it means infrastructure investment. But that's where the focus should be. What are the levers that we can pull to boost growth, boost productivity, and then leave the diplomatic engagement to Global Affairs Canada, and that's tough work. But on economic policy, we should be continually asking ourselves, how do we improve the Canadian economy through domestic policy improvements? And there's a lot of low-hanging fruit because Canada's economy has been stagnating for many years, and there's a lot of things that hasn't been going very well.
Right, right. And you bring up a great point. A lot of people talk about all the back and forth between the premiers and the prime minister, Prime Minister Trudeau, and I know some people have said, are they poking the bear, right? With respect to the conversations they've had with President Trump, and the back and forth, obviously very emotional. You have your yeah, brothers to the south, and all of a sudden
Yeah.
we feel they're turning on us, right? With what's happening. And no wonder, investors feel nervous. I've been getting a number of calls, a number of messages over the last month, maybe even more now, about what's going on. What do I see going forward with respect to the Canadian economy, stock market? Is this going to last a long time? Is this environment going to last a long time? So I thought I'd pose the question to you. Where do you see the Canadian economy going this year? Do you think we will get past this, I guess, the first half of this year, and we will see better things in the second half? I guess when we ring the bell, December 31st, when the big ball comes down in Times Square on December 31st, where do you think the economy is gonna end up? Where do you think the Canadian economy? How do you think we're gonna fare? I guess for the last, 9.5 or so months of this year.
Given how much uncertainty there is, it's difficult to know where we're going to be in 9.5 hours or 9.5 days, let alone 9.5 months. So I certainly won't offer a prediction about where I think we actually will end up being at the end of the year. I think it might be best to think about scenarios. If the tariffs come in and stay, and they are broad, of the order that's been communicated, 25% on almost everything and 10% on some energy and resource goods, that would potentially slow economic growth by, estimates vary, but somewhere between 2 to 4%. My own estimate's closer to 3. Bank of Canada's estimates are about 2.5 in that first year. So potentially enough to push Canada into recession in 2025. Add to those tariffs, the high uncertainty alone will be a drag on investment and will increase unemployment. The amount of uncertainty that we've been measuring is up so much that if historical patterns hold, we might see declines in investment over the coming year on the order of about 25%, unless things improve quickly. And unemployment rates rising just from uncertainty alone, something on the order of about 1%. Again, if things continue as they are for the rest of the year. And so that plus the tariffs might mean that unemployment nationally rises to close to and around 10%. And that'd be a very difficult time in the labor market. That right there alone is roughly 600,000 jobs lost. But if the tariff uncertainty can be resolved, federal policy uncertainty also may be soon resolved, depending on election timing and what's decided there. Then uncertainty could fall, the trading relationship might look more secure, and things could improve relative to that pessimistic scenario. I think even in the optimistic scenario, there's no avoiding slower growth. Like, do we have real GDP growth in the order of 1 or 2%? Or is it negative? That's kind of the range that I think we're looking at. Unemployment rate has also been rising recently. And the last labor force survey data that we saw may be an early indication that the labor market is going to start getting weaker, kind of plateauing there in February. So I think we may very well see unemployment rising a little more through this year, largely because of uncertainty. But whether it gets to to that 10% rate or so by the end of the year, I think that's really up to the US president,
Yeah,
not
no,
something
no
that we
doubt.
can do here. So I don't know how to predict the resolution of tariffs. If one is a little bit more optimistic, then we may avoid recession, but we'd certainly see slower growth. But longer term, and I think this is a good point, this moment has really reminded a lot of Canadians of the importance of getting economic policy right. Right? There's a lot of things that we can do to improve productivity, improve growth, improve labor market outcomes, improve the amount of income that's being generated, improve affordability that we really haven't been um, paying a lot of attention to, let's say, certainly federally and to some extent in different provinces as well. And this moment has, I think, changed how Canadians think about policy and has caused us all to put more weight on economic outcomes. And that will mean, I hope it means, longer term economic benefits through faster productivity growth, which has been lagging for many years. And that means faster real income growth for most Canadians. And that's been lagging for many years. So longer term, I do come down on the very optimistic side of things.
Right, right. Do you think any sectors go unscathed? Meaning, is there any part of the economy that won't be affected by these tariffs, or do you think that it'll just be right across the board, whether it's direct or indirectly affected?
Yeah. Most sectors in Canada are affected by trade with the United States. Even if not directly, there's a lot of linkages between sectors. So think about most service sectors in Canada. They're not subject to tariffs by the US. Those are levied on physical merchandise that enters the United States. But a lot of service providers sell to businesses that are themselves exporters. And so all these supply chain linkages really make it difficult for anyone to come out of a broad-based trade war with the United States unscathed, with a couple of exceptions. There are firms that specialize in helping businesses manage these type of disruptions. So if I think about management consulting firms, for example, they might see
Yeah.
an increase in demand for their important service. But other than these kind of narrow types of activities, is broad-based weakness in Canada that we're looking at.
Broad-based weakness. Yeah. So I thought I'd end up with my last question, kind of a different way of thinking, but I thought I'd throw it at you anyway, see what your comments would be. So we know that, countries, in this case, the United States, puts a tariff on goods coming from Canada into the US to make our goods more expensive. So that, I guess, the idea behind it is people will buy American. They won't be buying Canadian because
Yeah.
it's more expensive. And at the end of the day, in my opinion, who's affected by it? Americans themselves or businesses, because someone has to eat that higher cost.
Yeah.
So now we when I look at what Canada is doing, reciprocal tariffs on our end, right? We're putting tariffs on US goods coming into our country. And I think about it and I say, well, who are we hurting when we do that? Well, we're hurting our people because we've now raised the cost of goods that people buy on our side. And I understand we're doing it so that we buy Canadian, but that's probably already happening anyways. We've seen a tremendous amount of patriotism from Canadians that want to buy Canadian, that aren't going to the US for travel or for trips. So kind of a silly question is, why are we putting reciprocal tariffs on their stuff coming over here? Wouldn't it be just smarter to say, okay, keep bringing your stuff. Our people will pay the same price. You're the one that's hurting your country and the people in the United States. So, I understand why we're doing reciprocal tariffs on our end, but isn't it just hurting Canadians?
I tend to agree. And so I think about how we've responded. Well, it's removing alcohol from shelves in various provinces, canceling government procurement contracts. Ontario canceling Starlink is one prominent example. But more broadly, it's the federal government levying 25% tariffs on our imports from the US. And you're right. These are tariffs that will be borne not by Americans, but by Canadians that are making those purchases, whether individuals or businesses. And this is why it's very important not to use that tool too much. And the government, to its credit, the first phase of retaliation was just on about $30 billion worth of imports. It sounds big when I phrase it like that, but it is actually a very small fraction of what we purchase from the United States. And it's largely levied on final consumer goods that might be easier for us as individuals to substitute away from. They're not really on items that businesses use here to produce other goods and services. And so those types of tariffs will largely avoid these kind of cascading disruptions within the Canadian supply chain, which really would hurt the economy and our productivity. So, one argument for this type of retaliation is it facilitates a public relations campaign and marketing. So, when Premier Ford goes on to various US media networks, he can talk about these measures. And so, having something to talk about in those engagements, having items that will cause US based business groups to talk about with their representatives. There might be some value there, even though it's ultimately a cost borne by Canadian consumers. But that does mean we can't go too broad. It needs to be just broad enough to make it a credible component of our marketing and engagement, but not so broad that it actually causes disruption to the Canadian economy. So this initial phase one, it would have the effect overall, if it's fully passed through to consumers, of increasing the consumer price index by about 0.6%, I estimate, which is pretty meaningful relative to a 2% target change in those consumer prices. And so we might start to see it showing up in our measure of consumer prices. But that, I think, is a manageable cost, in order just to facilitate that non-economic engagement. But some are calling for across the board, dollar for dollar responses. And I think that's very unwise, because it then would fall on inputs and capital goods. And 80% of our trade with the United States is on intermediates and capital that our businesses use to make other goods and services. And so I think we ought to avoid that. And then the focus should be by Canadian governments, as we've talked about, on domestic policy reforms that can improve the strength and resilience and growth prospects of the Canadian economy.
And maybe in the end, it'll be I guess it's hard to see it now, but a good thing. It's forcing us to do other things, to focus
Eventually.
on other places, Europe, other trading partners, and like you said, get our domestic economy. I don't know if the right term is in order, but at a better place. And I think maybe perhaps this is well, it definitely is an eye-opening uh, situation that we find ourselves in. Trevor Tombe, professor of economics at the University of Calgary's Department of Economics and director of fiscal and economic policy. Thank you so much for being on our show and shedding some light into the trade barriers, the coming down of trade barriers. Hopefully, we see that in the coming weeks ahead, and shedding some light on economics and how everything is being impacted with regards to tariffs and what we can do to mitigate the effects on some of these tariffs. Thank you again for joining us, and perhaps we'll have you back somewhere down the road, and or maybe a different environment by then.
Well, sounds good. It was a real pleasure, and look forward to next time.
All right. Thank you so much.